So good morning, everyone. Joining us once again for our weekly broadcast, our quick 30 minutes update on the market, a little bit of what's happening in the world of Leo crowdfunding and some good education tips and things just to keep you in tune and up to date with what's happening in the market. So as usual, I'm joined by John Corey of Property Fortress. Good morning, John. How are you?
I'm good. And you?
Very well indeed. Very well. Looking forward to the next couple of weeks. Hopefully the weather's staying nice and looking to go on holiday at some point. So we'll see how next few weeks pan out. Also joined by Dal Ray, our newly installed investor project manager. So good morning, Dal. How are you?
Good morning. Yeah, very well, thank you. Hello, everyone.
Excellent. And for those that maybe weren't on last week's webinar where we introduced Dal, he's really in charge of all things investor relations within Leo crowdfunding now. So glad to have him on board. And as the topic today is going to be all about the various projects that we have been working on, have fundraised for, it's good to have him on. So if you have any questions, put your questions as usual into the Q&A box. Do not use the chat box. Stick it in the Q&A and Dal can look at those and ask John and myself as we go along. And of course, always keen to have feedback, always keen to have comments from anyone in the audience today. So before we get into the various projects, John, we always like just to have a very quick touch base on the market. This caught my attention and this is well, really referring to the fact there's probably around 800,000 flats in the UK that at the minute no lender will touch, obviously following the whole cladding crisis and the Grenfell, etc. So is this something that you know much about in terms of the cladding and the construction side of things? And is this fair of the lenders or are there genuine concerns?
So let me answer it with the more generic and then we'll get more personal. So it's fair in that if the lender is trying to lend on a property and they can't determine its value, then it doesn't make sense to do the loan. And one of the problems with determining its value is whether it's actually safe and habitable. So there are these 800,000 approximately flats that have various issues. Some of them are very specific to cladding. Some of them have to do with other fire safety issues. And I personally own some of these, and this has been a serious problem. As an example, one building has what's called a walking watch. So you're paying 24/7, 365 to have people walking around, make sure there's no fire. And if you don't pay for that, which is running, what is it? I think it's £3,000 a quarter times 100 units. So you could do the math. If you don't do that, they'll just evacuate the building and 100 and something families will have no homes. So it isn't just a lending issue and it's a massively expensive issue. Professionals are looking at bankruptcy as their only choice. And that means they'll no longer be able to be a lawyer, accountant, whatever they are. There's all kinds of collateral damage from this.
And Dal, obviously you live just north of London. I mean, this is obviously a tragedy when it happened. You know, it's never nice people lose their lives, but from a purely property point of view, I mean, it was a bit of a game changer. I'm sure you can recall this happening. And I don't know if you can recall any of the debates around it or discussions about it or anything you want to add on this.
Yeah, absolutely. So in the last few years, obviously, since the crisis and obviously in the unfortunate circumstances of what happened, I know a lot of friends and kind of colleagues that have invested, such as John, who are facing issues around the watch, as John quite mentioned. So once they've I know a lot of the value of these flats had dropped due to this, because there was a lot of landlords that wanted to offset certain properties just because of the cladding issues. But I think now I'm hoping, I think I read something in the next kind of 6 to 12 months, we're expecting some sort of kind of refund from the government or they're working something out in terms of grants, from what I understand.
Okay, well, they're going to have to find a resolution. They can't just keep kicking the can down the road. At some point there has to be a solution. So, John, I thought this was right up your street when I saw it. You're the first person that bounced into my head when I read this one. Being your sort of tech background. For those that don't know, John, being an American, is very modest and doesn't usually blow his own trumpet, but he did actually work for Steve Jobs many moons ago in Next. So he does actually come from a Silicon Valley background, as well as being obviously high-level corporate and various banks, etc. So I know this type of AI sort of platform integration and all this is right up your street. So what was your thoughts on this as a new way of valuing property?
So if we leave out the idea of AI, we just say they're doing a better survey. There was a Canadian company that then relocated to the US that was doing weekly, I think it was valuations once a year of all houses in the US. And someone said, how can you do that? And they said, well, they pick up the trash every week from every house in the US. So they were taking this view that they were selling almost like franchises, and the valuers, the individuals, would buy a certain set of streets, and then they would value every house, and they would look for sales. And when those sales happened, if their numbers weren't close, they would then figure out what was different. So this is slightly better because this is talking about 500 data points where they're going to really be more specific about what it is that makes up this property and why its value and things like that. More data is good, and there'll be outliers, there'll be problems, there'll be houses that have issues that you couldn't pick up easily, but those will be the exception rather than the norm. And if we can value things more accurately, buyers can buy quicker, sellers can sell quicker, landlords and tenants can have a better relationship because they'll know what they're renting. So I could see this having a lot of legs.
Yeah, anything that speeds up the process is going to have a very positive impact on the market. So it's certainly interesting. So let's get straight into our main topic today. And this is our last webinar for a few weeks. We're going to take a break, as I'll say at the end. But in terms of recently, we did our investor update project webinars, and all the shareholders of our various projects that have funded on our platform were invited to obviously to speak to the fundraiser on a private webinar. Those proved very, very successful, really good feedback from shareholders. And again, if there are any on today, I want to even just throw something in the Q&A. Any feedback about those webinars, or how they enjoyed them, or what they found interesting, or what they learned, then by all means fire your comments into the Q&A, and Dal can have a look at them. So what we thought we'd do today is literally do a quick run through of the various projects. Now the first one is the Aldermans Green project. This currently is the only project we have that is behind the forecasted schedule. This was actually the first project we did. I know, John, you're obviously involved in this and helping to structure this deal in terms of your experience and planning. And obviously we've learned a lot as a platform since then, this being the very first one. But for all intents and purposes, really good opportunity of a planning uplift gain. We raised 110,700, projected return of 45%. But of course, planning is higher risk on the scale. And right now, this one is delayed. There's been some ecology questions raised by the council. So Darren's planning team are seeking to solve those issues. So as of yet, this one has not paid out. So any comments on this one, John? I know you're a shareholder.
Well, this one's
shareholder.
this is definitely late, but at the same time, this is another one of the examples of COVID. It's a complex project, has lots of moving parts, ecology and other things. And when it's difficult to get people together, that slows it down some more. So, there was an element of piling on problems, but slowing down the process. The project itself, you can't see it in that photo, there's a waterway that goes right by it. So there's some ecological impact. If you develop the site, how does it affect the wildlife and all the rest of it? And they're trying to come to some sort of decision because the council wants housing. The council also wants to take care of the wider issues around the local ecology.
Yeah, so that's number one, Aldermans Green. Number 2 then is the Avon Valley Apartments down in Bitton, down near Bristol. This was from the Beaumont Homes developers, experienced developers down in Bristol. And Ed was on the webinar with some video clips and some up-to-date images. So for those that are familiar with this project, this used to be just a garden beside a house. Ed came to the platform and we raised the funds to purchase the garden. And then he has obviously, since the planning was there, and he's now built and effectively sort of at snagging stage. So this is a possible payback. And again, given the usual caveat that this is no guarantee, but it's a possible payback September, October, which will be very much be in line with what he had forecasted. I mean, Dal, you were on this update with the shareholders, and Ed certainly was able to give them a good detailed overview on where the project was.
Yes, indeed. So very informative. It's going to budget and plan, and good kind of outlay of where he is. And I think just kind of having a look at it from the outside, obviously I didn't know too much about the project initially. It gave me a good insight of what's been going on. And yeah, certainly he's got a lot of work done and at the finishing stages now.
Yeah.
And you visited this site, David, right? Before it started?
No, not this one. It was
Not
a different
this one?
one.
Okay.
Yeah, different
I
one.
remember you and Ed in hard hats and all that.
Yeah, that was a different one that
Okay.
yeah, so that
So
not
this
Avon
one.
Valley. Yeah. So yeah, this is very much excited by this one, and it is possibly could be the first one to pay back in the platform. We will see. There's a bit of a race on to see who's going to be the first one to pay back. But there's some other photographs of the site. So yeah, really good job done by Ed and the team on this one. And just moving now to final drawdown. Interestingly, one of the challenges, John, initially when they were doing their numbers, it was right in the middle of COVID. You know, it was like what, nine months ago, and it was a real concern about exit, and investors, rightly so, were asking, well, what happens if the market drops? You know, and the refinance, will there be enough pay back the investors? As things have worked out, you know, he's gonna probably keep them, but the value obviously is increased from what it was a year ago. So he's got a nice smile on his face because the value, the GDV is definitely higher than what he thought it was going to be. So the next one then is Plough Hill View, and this is one that's sort of in the race to be the first to pay back. This is Hitesh, who has been a client of John's, and yeah, so John, I'll let you maybe take this one away, seeing you've obviously been involved in this one with Hitesh initially.
So this was their first development project as a new company. The founders have a long history in various other companies when it comes to engineering, development, things like that. But they came together as a new team to create this project. Bought it in auction, and then we're building out 5 homes, timber frame, offsite construction featured, and then environmental features added. They did some also changes to the plans to increase the window space, so more family friendly for if you're gonna be in lockdown, you want to have a lot of light, you want to have a lot of space or visual impact. And it's moving right along through the whole COVID period. It did help a little bit to have some of the work being done off site, so then they could spend less time in close quarters.
Yeah, and this one is again possible payback September, October, all things being equal. The good news was that Hitesh was able to share with the shareholders, which was very well received, is that they have in contract for their first sale. So that was obviously exciting news that one of the 5 units has now been sold, and I believe 2 more are quite close, but that'll be included in the next update. Yeah, I should have actually went on to this one, John, while you were doing your overview there, but yeah, one good thing, and this shareholders and investors love it when the developers can really bring the project alive. You know, not everyone, because of COVID, could obviously travel. And I know on one of the initial webinars we did, Ray, Hitesh's business partner, was on site in this green field doing a 360 with his mobile phone as the traffic whizzed by. and 9 months on, 10 months on, they're able to do this drone footage and give a really good overview to the shareholders of exactly where the project is. So very beneficial, very informative, and again, a project that's looking very, very good. Very excited about getting it over the line, hopefully the next couple of months. So the next one then is West Buildings in Worthing. This is Target 5 land and property, and we had 142,538 raised from 27 investors, and this was a commercial unit, then turned into some apartments as well as a ground floor remaining commercial, so mixed use conversion. So on this one, there was 2 phases. There was the buying and the refurbishment and the renting, and then the initial plan was to hold it for 5 years and the shareholders share the rental income. Now the first part of it is complete. The refurb is completely done. The apartments are all rented. The commercial unit is rented, and Tina was able to show us the rental figures for each unit. So really good job by the team there. They have made a decision to actually sell the unit, given the way the market is right now. They feel commercially it makes sense to cash in on the buoyant market. So that is what they intend to do. So again, that might take 2-3 months to sell, but there is a strong possibility that this will also pay out in 2021. So again, I think John was really interesting from T5's point of view. They put a lot of effort into the interior design, and there's a very specific sort of color scheme that for their research indicated that tenants would like.
They do. I mean, I think this is, I want to shape that slightly by saying this is their normal process. They have a lot of units they do. They do have quite a student focus for a number of the properties. They work for a lot of landlords, but design has always been one of their strengths, and delivering a product that's attractive to the demographic that they're focused on. So the young professionals is one, the students are the other, and they really have dialed in what it is that market wants in the Brighton market, and then deliver it through all their units.
Yeah. So excited about that one as it moves forward. And again, the next monthly update, Susie's on this one. Tina and Andy will be able to give an update on what's happening with any possible sale. So moving on to the next one then, moving swiftly on. It's nice to have so many projects, John, that's funded that we have to keep rushing through them to get through them all on our 30-minute webinar. So the old Woolen Mill was again a really exciting project for the platform. It was a very unique type of project of an old mill down in Devon in North Taunton, and it's a planning uplift, and we successfully raised 111,000 from the platform to fund the planning application. This was our most investors in the deal, with 57 investors in the deal, with a projected return, if all goes well, of 50% on this one. So again, John, I know you know Susie well. I think I have a bit of a video here I can play while you're maybe giving any overview you want to give.
So this project has an element of self-build. It has a desire, at least, to be an active and rather than a passive home. So that means the net energy contribution of the site should be positive, in that it'll actually put more power back into the grid than it takes out. They're doing that through some innovations, but all of this is the design center for the actual planning application. And with the self-build element, that should help the local community, which the local community really thinks of this building is important to their identity. But then the idea that they could actually have people who want to build their own homes do so on site within the boundaries of planning and the other specifications that will come with this application.
Yeah. And the good news Susie was able to share with the shareholders is that the planning application was prepared and submitted on time, which obviously was the, if you like, sort of the green light is now goes with the council. And obviously we look forward to hopefully a positive response from the council. But again, it was a good update. And then shortly after the old Woolen Mill funding, I think it was about a week later, we funded Duke Street in Brighton. This was another project from Target 5, but this was a JV with CC Investments, Rachel Hillier. And this was the redevelopment of a late Victorian mixed-use property right in the centre of Brighton. Actually, this one was. Yeah, again, a very interesting project right in the heart of Brighton. I thought the location was absolutely fantastic. Sort of 6-7 minute walk to the beach. We raised 169,000, projected return of 20% on this one, and expecting in around 10 months, this was just going to be refurb, tenant, and then sale. So again, another one from Target 5, John. And as you say, this is what they do. They're just conveyor belt of deals.
Yeah, and this is, they're partnering with a particular individual and her company. So this is a JV with another team, and the commercial will be retained as commercial, and then the residential will be the normal sort of city center residential for young professionals is more or less their design center.
Yeah. We actually had a couple of investors who were actually happened to be in Brighton, and Brenda was able to arrange with Tina, and they're able to get a look round. So they were very excited. I think they put it on social media, some of the pictures of their visit. So I think for investors that are able then to actually walk around the building, I think they find it very beneficial from an education point of view, just to see the building sort of in the middle of strip out, which was absolutely great. Okay, so there's a project people probably don't know a whole lot about because it was a private raise. This was done behind the curtain. And I do want to sort of emphasize this one so people understand, particularly fundraisers, that there is this option with crowdfunding platforms. This involved property, but it was more than property. It was really a mixed use leisure facility over in Wales. It was an 18-hole golf course that was then been converted into a number of leisure facilities. So a very interesting project, a big project, lots of moving parts. And they had an investor group of dentists. So it's the Dental Property Club, as it's called, run by a guy called Harry Singh. And so effectively the project was there, the investors were there, but they wanted to be compliant. They wanted to make sure they were not looking at anything like a collective investment scheme. There was the issue over the flow of funds. There was the investor management. So Raglan came to the platform, and we hosted the raise behind the curtain. So it wasn't public initially. And over 2 tranches, we've raised 172,000 from 12 investors that I say came from off the platform. So John, an interesting model that developers can actually raise funds privately if that's what suits where they're at with their project.
Well, as an example of this one, they definitely wanted to be compliant or follow or guided in the FCA regulations. And they knew they could reach out to people that they had already spoken to about other projects or done business with in prior lives. And it's just, how do we make this all come together? So by going to the platform, that you were able to provide almost like a white labeled service. It's not white labeled, but it's this idea that you can fill in the gap that they had, but they're not doing a full-blown public raise where they're out there splashing the news to the world.
Yeah, and they actually have, well, here in a minute, they've actually got another one that's about to be launched behind the curtain as well, another tranche of this one. And then the last one that we've successfully raised for in terms of project going forward was the Hightown Leys in Banbury. So this was just literally funded a week or so ago, 88,000 raised in, I think it was about 9.5 hours from 27 investors. And this was a joint venture with Atesh, again from Creation Tech. It's his third project. Can't remember.
Yes.
Third project.
Yeah, third project, because they did the planning one up in Scotland. Yes,
correct. That's yes. And they JV'd with Brendan and Michelle Van Rooyen, and together collectively a brilliant JV team, all three with their own experience and skills. So this project is literally in the shareholder agreement has gone out, been some comments from investors. So it's now about to go out with the amendments, and then the investors can accept, and we can draw down funds on this hopefully early next week. So that's the plan on this one. So just sort of wrapping up, and John, this is where it actually sometimes when you're in the heat of going through a forest and you're dealing with everything, you sometimes don't see the wood for the trees, is the analogy. But when you step back, since January 2020, and especially given all the months of uncertainty with COVID and the market changes, the platform has successfully raised funds for 11 projects, 1.356 million raised from our investors. I think we're approaching now around about 200 different investors have invested on the platform. Listen, we're still a small company in this industry, but in terms of the journey we've been on, I think it's very exciting to see the amount of projects and the variety of projects that we've actually funded.
I mean, it's great news. And as a passive investor, because I've invested in a few of these, I can do a little less. I mean, the fact that they're coming through the platform, I can look at them and it's easier to coordinate. And then after I've made the investment, it's easier to see where my investments are and what the amounts were or what documents and all the historical information. So it's been very positive as a passive investor to have sort of the facility. And on the other side, when it comes to raising money, if I'm a fundraiser and I've worked on some of the proposals, I want to know that there's deals being done, that there are investors showing up. It's sort of like this is a marketplace. I want to know people show up in the market, because then that way there'll be more opportunities, which means there'll be more investors, which means I can bring my stall, my cart to the market, and I can get my project funded.
Yeah, I think it also shows the potential, Dal, that I know, John, you always talk about this, and people don't really grasp this with crowdfunding sometimes, and that is the opportunity to diversify your investment, putting a little bit into multiple projects, different parts of the country, some planning, some development, some perhaps buy and hold, different developers. Property crowdfunding allows for that potential. And Dal, as the investor project manager, this is something that you'll obviously be sharing with investors and letting them see the potential. If someone had X amount of pounds in 7, 8, 9 of these projects, well, it spreads risk. But from a diversification point of view, it's very strong.
Yeah, no, absolutely. And I think also on the back of that, David, just education. I mean, obviously crowdfunding's been around for, about 15 years or so, but, we've seen it happening beforehand, not so regulated, but now it really brings all these investors together, diversify their portfolio, as you mentioned, and they can educate themselves whilst hopefully, earning money. And it's my job here to make sure that I manage the relationships and answer any questions that they may have. And I'm looking forward to it. And great, what a great start.
Yeah. And John, what's really interesting is this right-hand column. So we know that Alderman Screen is obviously delayed. So we've been very clear on that. So that obviously is a late one currently. Hopefully it will still come to fruition, but time will tell. Obviously, this is equity investment. There are no guarantees. Capital is at risk. So we'll see how that one plays out. But if we go down the rest of them, Avon Valley, Plough Hill, West Buildings, all things being equal, that they're going to be paying out September, October time, right through to early next year. So we're starting to see investors will have invested. The projects, all things being equal, will be successful. Their funds will come back in, and there's a good possibility that a lot of those investors will redeploy those funds in other projects. And I think that's sort of the magic a little bit of crowdfunding, that you can start to recycle funds in multiple projects as they mature.
Yeah, I mean, there's two sides to this. As a platform, it's nice to see the money come back and then go around again. As a property investor, it's always good to get your profits. It's always good to get your cash back, show that it works. But then it's the idea that there's always another deal coming along. So whenever those funds might arrive, it won't be too long before you can look at maybe redeploying them. And I'm not saying you should automatically just jump back in, but there's always another deal to look at. You can always say, look, I don't like that deal. It's on the right side of the street. I only do left side, whatever the esoteric reason is. And there'll probably be another project coming along. So you can just wait and not feel any pressure to dive into a project because you haven't seen anything. So there's always something to look at.
Yeah, and we have had 2 projects, as it's on the screen there, where we actually raised the funds, but then for various reasons, the fundraiser decided not to proceed with Drawdown. So like the platform did their part, but the situation with the project was such that they made a commercial decision not to proceed with the crowdfund. Now, interestingly, John, just on what you said there, had a communication this morning from an investor on our platform who was on our webinar last night for Citygate, and he had a couple of brief sort of observations on the webinar and was commenting on that. And then he indicated that he may be interested in investing in Citygate, and I was like, well, that's fine. And he said, I've had 2 projects pay out quite recently, and he named the amount of money that he now has, and he said, you've no idea how annoying it is that I can't find the right projects to deploy the capital. And effectively he's looking for the right way of deploying capital. And I think more and more people like him will gravitate towards property crowdfunding platforms. So the deals are brought, they don't have to go and find something themselves and put all the time and effort in. There's the crowd validation of multiple people talking on the forums, looking at the project, and it's an easy place for someone to come and have a look at projects and see if they want to invest.
It's very easy. It doesn't mean that every deal is a good deal, but compared to doing whatever you normally do, I mean, if you're a passive investor trying to find a deal that you want to back, you got to find someone that knows what they're doing and hope they have a deal at the time. So you're constantly having to reach out to people, wait for them to call you back, all this other stuff. It's so much easier if you can go to a JV equity site. So not a loan site, but I'm going to buy into this deal. I want a JV with someone, but I want the information brought to me in an orderly fashion. And I want the essentially paid professionals to be monitoring the project, to be collecting information, give me a full audit trail of everything that's been communicated. All of that just comes as a natural side effect by being on the platform.
Yeah, absolutely. And again, just to highlight, just to be clear, obviously we've put out planned dates. Obviously, there's no guarantees in that. This is an equity investment into an SPV that's doing the project, and obviously time will tell whether those projected dates are delivered on. Now, it's also interesting, and we're coming to the end of the broadcast this morning, but what's interesting, John, is that when we look at what we're working on currently, these are projects where people have paid to onboard. We're currently going through the onboarding process, the due diligence, getting the documents approved by our FCA principals. So none of these are live or anything on the platform yet, but we do have a number of significant projects, around about another 1 million of investment opportunities coming over the next weeks and months for our investors on the platform. So it's a nice conveyor belt, and what I really like about it is that in some cases it's developers coming back for additional raises. So I think that really lends itself well to building relationships between fundraisers and investors on the platform. So the other thing just to mention as we conclude is investor communication. We've had a lot of really strong feedback from investors about the way we've been keeping shareholders informed once the projects have been successfully raised. We do a monthly update, which gives the key points, any educational tips that can be given, pain points. We then do a quarterly webinar. We just did these last week, where the shareholders are invited on with the developer. And the developer can give a real-time update. And then, of course, we always have planned these site visits. Now, COVID obviously completely messed that up for us in terms of 2020. However, now that lockdown's out, we do intend to speak to the fundraisers, and hopefully over the next 3 or 4 weeks, get some dates that we can send out to the shareholders of the various projects and give them an opportunity to visit the site live if they so wish. So if you take the ones down in Brighton and Worthing with Target 5, particularly Plough Hill View, for instance, where it's nearing the end of snagging and completion over in Avon Valley, it's probably a good time to get investors on site just to see that final phase of snagging before it goes to sale. So you can stay tuned for that. But I think, John, the site visits and the webinars are two very important tools to keep investors informed.
As a passive investor, I'm not necessarily that interested in the site visits. But then again, I don't mind vicariously living through someone else who's doing a site visit. But this idea that I can get updates on my projects, updates on my investments, again, as I've said, it's one place, it's organized by project. The information has some consistent delivery, whether it's a monthly update or quarterly webinar. So these are all the things that help protect my investment. Now, it doesn't mean my investments are going to do well. It doesn't mean there won't be problems. And I like to joke about maybe a dead king, the queen lost one of her relatives and suddenly they show up on a site and slows things down. All those things can still happen. But when it comes to at least trying to keep my investments organized, this is actually way to go.
Yeah, and again, we've had fantastic feedback from what I would call experienced investors, and even people experienced in the world of property crowdfunding have been very complimentary on our investor nurturing, which is a really good plus to the team. And no doubt Dal will take that to another level now over the next months and years when it comes to that. So it's a high bar already, Dal. You've got to come in now and you've got to raise that bar even higher.
Yeah, no, look forward to it. Absolutely.
Yeah, I know you're up for the challenge. So just to literally finish off then, Citygate Heist did a webinar on this last night with VJ. This is open for another 10 days. It's currently sitting at actually 300,000 now. Minimum is 400,000, maximum is 600,000. We'll send out a webinar link via social media so that people can see the webinar that happened last night. But this is around about 10 days to go on this one. 56 apartments being converted from an old HMRC building near the centre of Leicester. A good project to look at. And then we are just about to launch the Bridge Road in Kingswood. This is a Beaumont Homes West Country Partnership JV, and this one will be launched quite soon. It's the refurb of an existing property and then the construction of a new dwelling in the garden. So it is almost about to launch. So Clubhouse, we are off Clubhouse to the end of August, just with the holiday time. I've noticed the numbers have been dropping significantly on the various Clubhouse rooms. I don't know if that's just the novelty's worn off or it literally is just holiday time. But we're going to stay off Clubhouse for the next couple of weeks and come back in September. And we're going to take a break from this weekly broadcast. It's quite intense for the staff every week to be preparing the slides and getting all the social media, and everything has to be FCA approved by our principal. So we're going to take a break for the next couple of weeks. So you can stay tuned when you get a next update as to when we're back, maybe the 26th of August, because we do have a number of projects that will be on there for investing. And it's important obviously we communicate to everyone. So I think, John, I think we've done this, John, unbroken since March 2020. Would that be correct? I think we maybe had 1 week at Christmas. But other than that,
I think that's accurate, that there was very little gap. People can go to the YouTube channel and figure out what that gap was, but I think you're right, it might have been at Christmas.
Yeah, the plan is we're going to have a whole nice revamp as well. We're going to revamp the slides, have a different image, maybe change the format a little bit. But certainly with the feedback's been great on these broadcasts, 30 minutes, quick updates. And I think, John, educationally, I think people are getting value out of these broadcasts.
Yeah, actually, I think it'd be funny if people wanted to score. I'm not sure it's ever been 30 minutes.
It's been under a few times. I went slightly longer today. See, we've got 3 weeks to make up. So there we are. Well, listen, on that note, as John's looking at his watch frantically, we will call it a day today. We now have this recording, which will be really good for people to go on the YouTube channel and see all the different projects. But Dal, thanks for joining us once again today.
Thank you.
John, thanks for joining us.
Thank you.
And for all the people who joined us today, thank you for your time. Look after yourselves. Stay tuned in a few weeks' time, and we'll talk to you then. All the best. Bye-bye now. Bye-bye.